Hello, everybody. I'm Cher, Head of APAC Products and Support in the Investment Intelligence Division. This is part of Nasdaq ongoing investor education series for the APAC investors, and today I'm going to share with you about the US market structure. It consists of two parts, and in this video, I will cover part 1 of 2 on this topic. As you are aware, over the last 2 years during the pandemic, we have seen the rise of retail investing into the US market. Hence, it is important for investors to understand the characteristics of the US market and the understanding of the US market share. In Asia, most markets operate a single exchange, and when there are multiple exchanges like China and Vietnam, these markets offers only a single venue and source of market information about the listed stocks being traded. The US market operates very differently. To understand the US market, we first need to understand the US market structure and the ecosystem within the US market. Firstly, the national market system. This national market system creates a standardized market system for issuers, investors, and liquidity providers, allowing companies, investors, and traders to interact at the same price despite each participant varied time horizon and different trading signals. Unlike APAC markets, however, a stock in the US market can be traded across different US exchanges as highlighted in the diagram on the right. I will share more details later in my presentation. In US, because of the US market structure, firms compete vigorously to provide the best bid and best ask to the public through transparent prices. This competition creates tighter spreads that not only reduce transaction costs, but also form prices that everyone can use for portfolio valuation and to find new assets to buy or sell. Like most markets, investor participating in the US market comes in two main flavors: institutional and retail. Data suggests they both have around the same capital to invest, approximately $25 trillion each. Other owners of equities include hedge funds, banks, market makers, arbitrageurs, family offices, pension funds, and foreign investors who hold US equities of investment, risk management, or trading purposes. Although each of these participants have different objectives, they all play a critical role in keeping the markets efficient and liquid. While the US market may be the largest source of equity capital in the world at $49 trillion, US markets are not alone in their mission to bring buyers and sellers together. Public markets also have to compete with private and international markets when attracting new listing. Listing and trading can occur in different trading venues in the US. This is where things get more interesting when I next share on the listing and trading venues in the US market. The US exchange landscape is comprised of 17 independent trading exchanges as well as multiple trade reporting facilities, or TRF for short. While all 17 exchanges compete for order flows, 5 of these markets have the additional distinction of being listing exchanges. Generally, a listing exchange is the exchange where a company sold shares to the market for the first time under the initial public offering, IPO or direct listing. In 2021, Nasdaq led US exchanges with 753 IPOs, raising $191 billion in proceeds. However, listing is not the only arena in which exchanges compete. Exchanges also compete for trading volume and providing proprietary market data products, and so on. In the next slide, I would like to introduce you to the Unlisted Trading Privileges, or UTP Act. Back in 1994, the SEC amended the Securities Exchange Act of 1934 to introduce unlisted trading privileges under the UTP Act. This UTP Act allows exchanges to compete for order flow regardless of where the operating company is listed. This effectively means that any exchanges can trade any securities regardless of where that securities is being listed. Of the 17 active exchanges, Nasdaq owns and operates 3 of them, including Nasdaq, BX, and PXX. NYSE have 5 venues, and CBOE has 4 of these venues. The remaining 4 other exchanges that trade less than 5% of volume includes IEX, MEMX, LTSE, MIAX, and the newest one is BSTX. Across all listed US securities, 60% of all trades by volume are matched through one of the 17 trading exchanges, but differ on a security basis. Nasdaq is the largest single exchange as measured by market share of today's trades every day. You may then ask, what happened to the remaining 40% of the trading volume then? I will share more insight on this in the second part of this topic. Please watch part 2 of the US market structure. If you are looking for more content on the US market, feel free to visit this website. Thank you.